price and all the bullish things that we have always discussed recently, from adoption from institutions and all these things. So I would personally, I'm excluding from my investments at least this red scenario, although I mean it's a possibility, right? But and it's something that, as I mentioned, we haven't seen retraces to the 618 level any since 2022, right? So we were here, as you can see here, far from this level again and again, and I don't see the reason why this would happen at this point, post halving. So I'm excluding this scenario, although it remains a possibility. But I am I would bet I would have a more confidence on some price coming down to this level in the worst case scenario. I'm talking about my worst case scenarios, by the way. These are not, I'm not saying these things will happen, but I would say, in my opinion, these are the worst case things that could happen, and I'm ready for this scenario to happen. And so yeah, this is how I see the market. Generally, also, as I mentioned, I'm not expecting any kind of neither too bullish nor too bearish price action in the next month, which would be aligned with everything we have seen on different narratives. Now, let me go just back to this chart here. And this is actually showing us kind of this similar pattern where we see a kind of very bullish price action in Q1 and in Q4. That's what we've seen. We had a very bullish Q1, and you see that June, July, August, September are generally the most bearish month, maybe excluding July. So I'm prepared for this to happen. Now, we mentioned about real world assets. Let me just conclude with real world assets, and then I'm happy to hear Mark's view on the market. So real world assets, we mentioned about ETH ETF news that we will start to see more and more inflows, in my opinion. And because of that, the next like most obvious move would be, okay, now that this thing is approved, what is the best, what could be the next most obvious move? And I think based on BlackRock, what they have publicly announced, that how they are bullish on tokenization and real world assets, and this is a multi-trillion industry potentially. We are seeing kind of a logical step where we are seeing now an outperformance of real world assets, and we are seeing as we saw, every narrative is down pretty much a lot in the last month, but we are seeing some real world assets that are doing really well. And this is not an exhaustive list, and there are other projects like Dusk, etc., which are performing well. So this is also, in terms of narrative, the only thing that I see kind of having strength in it. And if we go back to the narratives, in general, there is not much else happening I mean, there is this ETH and beta game that real world assets are one of them, but other than that, as you see, the trend is kind of downwards. And I mean, we had memes and all this kind of stuff, but now it doesn't seem that they're outperforming in the last month. So even in the 3 months, actually, you see that most of actually the narratives are down, except real world assets, which is a strong sign that there is something here. Privacy, I would contribute that to Railgun project mostly. So I'm ignoring that one. It's not. This is not showing the strength of the entire sector. But here there is really something to look into. We remember that we looked at the same chart a few weeks ago, and memes were the best performing narrative on pretty much all time frames. On the yearly is still the case, but on all these 3 months, 1 month, etc. But we are already seeing them underperforming, and even AI, which was another great performing narrative in Q1, is underperforming. So yeah, it's time to be cautious. It's time to kind of DCA and scale in positions, and it's time to be patient, and it's time to allocate maybe to larger caps, or to Ethereum betas. That's how I'm positioning myself, at least.
Corio, question for you. You see like these trends kind of going down a little bit, right? Real world assets, you said, is the one that's showing the most strength right now.
Mhm.
You want to be cautious, right? Because it's not showing so much strength. But when the market is down, would any of you, maybe an open question? Wait, where did Keith go?
Yeah, I saw
Keith,
Keith.
sorry, I removed you.
Hey,
I
Keith.
removed you. I didn't mean to. Is this when you would, I mean, when the market's going down, essentially you kind of, this is when you want to place your bids. This is when you want to buy, right? Is it because you're just not
Yes.
sure which narratives you would feel comfortable actually buying at the moment?
Yes, so this is a great question. Let me maybe clarify on that. So, one thing to answer is, what is your time horizon? Obviously, I would have a pretty good like confidence in saying that in maybe in 10 to 18 months we would be much higher compared to where we are now. So if this is a time horizon, then yes, this is obviously a good level to buy. In a shorter time frame, I would say that there is still more downside possible. So it's hard to really time these things and pick the bottom. So the best strategy would be here to just DCA into the projects that you believe in. It's really hard to say if this is the bottom or it will be 60K or 55K. I remember Keith said a few weeks ago that he was his dream level was like 45K or something. It's really hard to tell because things can cascade rapidly if there is kind of some bearish news, some macro things coming, and then we get liquidations, etc. So and because these things are hard to tell, and because it might be that we are actually near the bottom, you want to DCA. That's the best approach, in my opinion.
Yeah. One more question, and then I'll pass it over to Keith or Mark. Paul here, I posted his question. He's asking what tokens are related to RWAs.
Yeah, so RWAs
Maybe,
are real world assets. So these are projects that allow us to kind of bridge the gap between what we have on blockchains and the outside world. So there are different kind of sectors within the real world assets. There are real estate, there are like private credits, etc., etc. But there is all the things that we can tokenize, on chain. So one good place to start maybe is with this dashboard where you have a good list of real world asset projects. I saw INA is not considered the real world assets because it's just using the yield, and the funding rates has nothing to do with real world assets. But these are a list of real world assets that are kind of doing kind of bridging the gap between, and each of them are doing different things. So we have Maple here, we have SQL, we have Maker, very, very different projects on the. So I would recommend to start by looking into the projects that you see here, and then this would be a good place to, and then you can go and research some of these projects and see what they're doing and see which ones you like the most, etc.
awesome. I just posted your link to your Dune dashboard in the comments also. Um, okay, one more
Perfect.
question.
Mm-hmm.
So buy more, don't take profits.
Yes, absolutely. I mean, this is not a place to take profits unless you bought at 15K or 20K. But I would say that because prices would go much higher, at least in my opinion, in 25, this is not a place that personally, I'm not taking profits at these levels, although I bought lower, because this is not the top of the market. Again, it depends on your time horizon, but at least this is my view.
And
So,
remember too, none of it's financial advice, right? This is, like
absolutely.
you said, your view. This is kind of what you're doing at the moment. I'm just going to throw the disclaimer out there for everyone.
Thank you. Yes, exactly.
Yeah.
I can be wrong many times. I'm wrong many times. So this is what personally my approach. I buy more here and I don't take profits, not financial advice.
Awesome. Thanks. Choreo, and thank you, XBT3D, for your question. Anybody else has any questions, please throw them in the comments. I'll bring them up and be sure that our speakers, answer them and give their opinions and kind of what they're looking at or what they're doing at the moment. Keith or Mark, either of you want to volunteer to go next? Choreo, thank you again. Always.
Dealer's choice.
Keith, you want to go?
Okay. Okay.
First of all, I told everybody in the beginning, for all the Keith fans, that you would be joining. So you see, I am a woman of my word. Thanks for letting me say that, Keith. Keith Allen is the co-founder of Material Indicators, TA and algo trader, and order book analyst. Always brings up the fire charts and shows us kind of what we're looking at here in terms of liquidity. I'm always looking forward to seeing what you're looking at, all of you guys.
Well, I always appreciate the chance to be here. I love this conversation, and I love that I caught some of Choreo's analysis, because I look forward to that every week. And he said a few things that I really, really want to echo. And the first one he said that he kind of wrapped with was, "This is a time for patience." And if there is anything that you might have learned, I guess I'll jump into a screen share. If there's anything that you might have learned from all of the interaction that we have had with the with that 69K level that we've been trying to RS flip since literally March, it's patience. Because I think a lot of traders have a tendency to react super knee-jerk reactions to short-term volatility, and they end up over trading. I've been there. We've all been. Anybody who has traded for more than a minute has likely been there. I know I certainly have. And one of the things that has helped me the most is developing some patience and allowing things to develop. And you know what? That's something that I'm going to go ahead and credit XBT3D, who was just commenting here a few minutes ago, with helping me learn that, because that's one of the many things I've actually learned from him over the years. So look at the amount of times I'm on the daily chart here, and you can see that we have engaged with this level so many times since March, right, was the first touch here. And obviously we made a new all-time high, but this level has just been really, really tough to beat. And there have been many, many fake outs. Each time we've talked about the wicks below as signs of weakness, and it has played out once again. And we saw this developing here on Friday. Last week we had I think what is really kind of a classic move of what I like to call the predatory killer whale games. We often see this kind of behavior around FOMC meetings and Chair Powell speeches and economic data. And this is another week where we have all of those things culminating at the same time. Tomorrow at 2:30, Fed Chair Powell speaks. Nobody expecting a rate hike or a cut at this time, but it's all about the tone. It's all about the interview afterwards and reading between the lines of what he says. And so that's obviously weighing heavy on the market. And I think it is a time for patience to wait and see how that develops. It's also something, in terms of these classic moves, like we saw last week, we saw a pump into what was initially good economic, or at least Fed watcher positive economic news. A bunch of the liquidity was cleared out and they flushed it down. And, that was a classic trap. And today we're seeing, well, it's kind of going in the opposite direction, but is the net effect going to be the same? It's too early to tell, obviously, but in this move downward, they have cleared out a significant amount of liquidity, and that is easy to push back up if they decide to do so. So now that the late longs have been liquidated, do they go after the shorts? Or are these short sellers that are piled up here? This, by the way, not a liquidation map. This is a heat map of limit orders, but there's obviously a lot of leverage shorts up in this level. Are these guys the ones pushing price down, trying to close those shorts? And are they getting greedy? And if they remain greedy, then they're in jeopardy of getting liquidated to the upside. So those are all things to consider in terms of what we're seeing in the charts here, right? So again, I think it's a time to be patient and not panic. But I also think it's important to identify the critical levels that could lead to a deeper breakdown. And so the first thing that I looked at, obviously this 21-day moving average has been good, but it got obliterated, and so did the 100, right? So now that leaves the 50, which is that's the current test. That's the current test at the 50K moving at the 50-day moving average. And at the moment it's holding. But if we look at the liquidity that's at that level, which is what, 66K, then we can see there ain't a whole lot here. There's a little bit, but not as much as I'd like to see. And not to sound like a broken record, but how long have I been saying, as long as the upside has so much more volume than the bid side, it's going to be very difficult to go challenge the all-time high, right? With any confidence. So I'm always looking to see when that happens. When do we get that new bid liquidity that comes in down here that sends us back up? Hasn't happened yet. Doesn't mean it won't happen. Just means now's not the time. So this is obviously what I'm watching here in the short term, but I'm concerned, as we zoom into lower time frames here on the weekly or even on the daily. I'm concerned that there's not a lot of strength here, and these little moves right here, these little bounces, these are little traps, right? And if price gets suppressed, then we could go back down. Now, the fact that it's at a technical level, that's good. And the fact that we're seeing at least a little bit of buying start here is good. But is it sustainable? And that's what we have to wait, what we have to wait for and see. Now, if this breaks down, if we lose this level, what am I looking at from here? And this is probably where Corio and I may differ a little bit. I think a lot of our targets are the same. However, my confidence level in this 58 to 60K range, just based on the liquidity, is not there just yet. So a couple of ranges to look at. Obviously, we had a lot of consolidation at the 58 to 60K range, dating back to the 2021 all-time high, right? We consolidated up here. This was actually the beginning of the distribution. We dumped, had a distribution rally, all-time high, and then the rest is history. So there's obviously some valuable history at that level. And then, of course, we have our current lower low is at 56.5. If we look at the weekly chart now, the moving averages change on us a little bit, and the 21 is one that I'm very fond of, as you know. And so that would be the first line of defense. If we lose this 100-day moving average at 66, the first line of defense in terms of technical support would be at the 21-week moving average. That is currently right at just sub 62K. And then, of course, we have this 58 to 60K range. Again, there's not tons of liquidity here at the moment, but nothing changes sentiment like price movement. So as price moves down, we may see that move into place. So I'm looking to see if bid liquidity moves into this level at 62K, or if it moves into 58 to 60, or if it moves, above 55 to defend this level. I think that if things do break down through here, we will see some bid liquidity move in to try and defend this level. Doesn't mean it will hold, but maybe it does. So if we make a lower low, to me, that still hasn't broken the macro structure, but it does, to me, open the door to a bigger move to these prior consolidation ranges, 50 to 52K. We didn't spend very much time there. We spent some. It's noteworthy. I think 50K is more psychological than it is technical. And of course, this range down here, 40 to 45K, where we spent so much time. But look what happens here. Now, keep in mind that these moving averages, they move up and down, over time, depending on what price action is doing. And this is really the 50-month moving average is sliding right into this range here around that 45K level. And what's below that? Well, this is what I'm calling really our macro trend line, at least from for this cycle. We started back here at the beginning of the year, kind of climbing out of this, and so If we were to lose the 21-week moving average, that to me doesn't kill things, but it does show us, it's really what I would consider the first indication that the macro is weakening. I look for 3 confirmations. That would be the first. The second to me would be the 50-week moving average. And then the third would be this trend line right here. So imagine that we grind down, and again, the trend line is moving up over time, right? So far we've seen a 23% correction since the all-time high, and very common to see corrections like that over, after halvings and in bull markets, right? We've been through this. We went through this a bunch over the halving period. So not going to spend a bunch of time on that, but it's easy to see that we've had periods of consolidation, periods of correction after halvings, well into bull runs, and there's no reason to expect that that's not going to happen this time around. It's happening. So go ahead and do what you need to do to come to terms with that. But there have been a series of 20, 30, 40% corrections or more. So what would happen if that played out? So like I said, we've seen so far, this is what a 23% correction to our current lower low at 56.5. And if things were to break down further, then we start getting into that 40% range. Let's say it takes time to grind down, right? I mean, we're right in that pocket here. So that gives me a lot of interest in this area. I like Corio. I don't see at the moment sentiment to go there, but when I look at the charts, I do see the signs and the invalidation levels that I would look at to say, all right, this is potentially going to be our target. And so if things break down and we could see a complete reversion from where we're sitting right now, tomorrow after Fed Chair, Powell's comments, and the economic numbers come out Thursday, we could see a hard bounce from here, and maybe that's it, and that will be fine. But let me ask you, do you see a stronger place on the chart that could serve as the foundation for the real next move up? And for me, this level looks pretty hot to me. So that to me is the magnet of technical support is down here. Liquidity at the moment does not exist there. So, I'm not seeing sentiment for that move to happen today or even this week. But if things break down from here, and especially if things break down from this lower low, that's where I'm focused. And again, not to come off as a bear, because I'm still long. But this is where I reassess, what I'm going to do. If, I have, my strategy a little bit different than Corio's as well. I think what he's saying is very valid about long-term horizon. A year from now that we should be up higher than where we are. I do believe that. I'm still trying to improve my cost basis. So I have rotated some funds out so that I could buy back lower. And now I'm looking, I agree with him wholeheartedly on the DCA strategy, and I'm doing that as we speak, using MTF, that mean our mean reversion indicator, to pick some areas to find some dips to buy. I haven't even looked at this today, and I know my bots are buying stuff. So where are we at right now? And you can see. So yeah, I just make little buys, small orders, to DCA my way in. So those are all valid approaches to this market. But until I start seeing that bid liquidity show up, I don't have a lot of confidence in this level. You see this little ask wall that just disappeared. So that was a little bit of these whale games that we're talking about, coming into focus here. So maybe we'll start stair stepping back up and go back after 70K, just like The whale games tend to play out, but if we lose these levels here, then you know where my focus is, and that's right here. I'm not saying it's a high probability move right now. I'm saying there is a chance it happens, and if it does, I'm prepared. That's where I'll be placing my chips.
Keith,
Keith, I had
question for you. Oh, go ahead, Corio.
yeah, thank you. I also had a question. You mentioned macro. Do you see, I know that you follow macro. Do you see macro bringing us down in the next month?
Like you, well, maybe not like you, but you mentioned how difficult it is to time these things, and I will tell you that I notoriously avoid trying to make time-based predictions, just because I think there's so many variables in this market. It's really difficult for me to, at least for me, to do that. I don't know a lot of people that are great at doing it with consistent accuracy. Um, Maybe you are, but for me, I just I've spent so much time as so much more time as a trader than as a long-term investor through my years in crypto, that it's hard for me to look uh, at a chart and go, all right, in a month we could be there, with the exception of saying, if we're on a trend, if we're on a bigger trend. And let me see if I can find this really quick. If we're on a bigger trend, then I can say, for example, let me find that. I got to find what I'm looking for. Then I can follow that trend line and say, hey, maybe at this point we'll be at a minimum, or a maximum we'll be at this range. Am I even on the right chart for this? Well, here's what I can say, because I don't want to kill a bunch of time looking for old geometry. What I can say is, over time, so let's say by October, if we're holding the trend, I don't expect to be lower than 50K, based on this trend line. In terms of upside potential, until we RS flip 69K, I don't see how we go after the all-time high once we do break the all-time high. And unfortunately, I can't find that geometry that I'm looking for. We do have a macro trend line, like a lifetime trend line, a channel up here that Bitcoin's trying to get back into right now. Up here, probably around 80K is the bottom of that lifetime channel. I think that serves as kind of the glass ceiling until we break back into it. So I agree with you that it's not likely that we break all the way down. And I don't think it's likely that we break through this trend line. But I have to be prepared for that to happen. It's the only way I know how to manage my risk, is by identifying all the potential scenarios I can possibly identify, and the conditions that it would take to get from one level to the next. And so that's my approach to the market. I do try and keep some dry powder, so that I can take advantage of those opportunities. And that's basically where I am right now. I'm probably 75% deployed in terms of my Bitcoin position at this point, because I did sell some. And we'll see if I just hold what I have. If I feel like a bigger breakdown is coming, I might sell a small chunk in profit, so that I can reinvest it, and buy back in at a lower price.
Thank you so much, Keith. I'm going to come back to my question for you, if you don't mind. I want to pass it over to Mark, make sure he's got enough time to go through what he's prepared for us. Mark, speaking of, did you have something special prepared for us? I don't know if you have something on the agenda or...
I do. Yeah, I've got some perspectives that I think are pretty that complement both of our other guests. In particular, it's remarkable how well Keith and I agree on where the target prices are. As usual, our reasoning is slightly different, and I guess I'm probably a little bit more bearish leaning. And I'll explain my reasoning. So there's just a couple of things that I want to point out. And it's comparing, what we saw last cycle, things that Bitcoin has historically done, and what I think reliable, oscillation indicators are trying to tell us. So the first observation is, if we have a look at the COVID 2020 sort of market bottom, remember this extreme pullback that we had. And we just measure like how long it took to get to sort of the top of this rally. It's somewhere around, like 400 days, something like that, 420 days, somewhere in that vicinity. And then, went down, went back up, and then we came all the way back down. If we then take a look at the bottom here, which occurred in sort of November of 2022, and we measure to about where we are now, you'll see that it's also about, just recently, it's actually slightly longer, right? We've actually been rallying for a longer period of time than what it took to get from the bottom of COVID to essentially the top, right? I know we came back down and made sort of a new all-time high, and that's fine. But it's just interesting to point out that a similar length of time has already passed. And there are, I'm not saying that Bitcoin's on a schedule or anything, but just that if you are of the view that these sort of financial cycles are relatively predictable, then, this rally is already getting pretty long in the tooth. The other thing to note, I'm very glad that Keith and I both tend to go on weekly charts, I've noticed, and we're the only people I think that present frequently that do this. I feel like everyone's always focused on the daily charts. But there's an indicator that has an almost 100% success rate, and that's the moving average convergence divergence chart, where the fast moving average, when it dips below the slow moving average, when it's like all the way up here, this generally marks an extreme capitulation. And I can show you what I mean. So for example, some people call this a death cross, and there are times where it's like more dangerous and there are times where you don't really care about it, and we'll discuss that as well. But the last time, not the last time, but one of the most significant times it happened, especially at this level, was during near the top of the last cycle, and this actually brought a 55% drawdown. It happened again over here near the actual top, and this brought with it a 76% drawdown. It also happened, back here during the blow off top in 2018, where it brought an 83% drawdown. It also happened, back here after this recovery into the pandemic capitulation, where it had a 68% drawdown, and it's happened just recently in the last few weeks. And so if any of these sort of indicators are, I've taken sort of a statistical average of these sorts of things, and I'm expecting somewhere in the vicinity of a 45 to 50% drawdown, which would probably take us sort of into this 30K range, I think at the very, very, at the most extreme level. Now, I think that the markets have matured maybe a little bit, or I think that we would all like to believe that they have. And I suspect that the market probably does still have some legs in it, just like it did back here. But if we're expecting history to repeat itself, or at least rhyme, I think is the idiom that people go with, I still think that a very dramatic drawdown followed by a rally before entering into the next bear cycle is probably to be expected. And so I think we still can make new all-time highs, but I think we probably need to come back and check some of these averages. And if you have a look at the averages that we checked in the last cycle, it's the 100 EMA and SMA weekly. And different traders have slightly different time frames. I don't care too much about the exact numbers. I find the rough numbers to be good enough. And so just taking sort of the let's say the middle for that region, between the 100 EMA and the 100 SMA is at about at 47K. And I heard, more than once that Keith was talking about the 45K region. And it just so happens that that's where one of these, 100-week moving averages is. And that is exactly the trend line that Bitcoin came back to check before, making its final rally before entering into the bear market, the last one. And so I think that we're probably in a phase like this. I think that there is going to be a very dramatic drawdown. There's going to be a huge amount of very angry and disappointed people that have bought at these levels, and that's fine. Like I think usually I say don't buy things. This is going to be a good time to buy things. You'll be seeing probably maybe some of the ETF funds starting to flirt with bankruptcy or court proceedings and that kind of thing. And this is all very, a very good time to go shopping. Also notice that there is a lot of confluence around this region, right? Especially this part here, and I saw it on Keith's chart as well. This like bar region here between sort of December of 2023 up until we broke out of it in sort of February of 2024, I do think that we're going to return sort of into this level with some amount of certainty. Like I have a lot of conviction in this. And so this is really like what I'm looking at now. When we went into this level, on the way up, I absolutely didn't want to buy. And I've been pretty clear, I think, on my bias during this. I've been pretty consistent on my bias during this market cycle. That if we come back into this level, I am buying. I would be very happy for all of these people that bought above me to be underwater. Like it makes more sense to me, on a risk-adjusted term, to have shaken some of these people out, or to have to have people that are still holding that after we collect back here and then rally again, that there will be people that are now behind me in the queue of profitability. And so this is, I think, a really, really attractive entry point. Now, to Keith's point, that Bitcoin does do these things sometimes. These really frightening moves. From here to here is still only 35%. And like I said, these weekly death crosses, they go down as much as like 66%. And that would take us like way down here. This would take us all the way back to sort of the 21K level, which is not out of the realm of possibility. And again, this has a near 100% fulfillment rate. Now, I want to offer the alternative, or at least some self-criticism here. I say near 100%, but it's not exactly 100%. So let's have a look at when this has worked out and when it hasn't. And so first, just have a look at the profile, right? We did have a very steep cross underneath, and usually you don't care, especially if the market's looking strong. Like if you're testing support or something, you don't necessarily care about it too much, but you kind of want it to get above it quickly. And you certainly don't want it to get steeper, and it's actually getting steeper now just the last week. So a good example is here where it crossed under and then recovered, but then eventually it did get steep again, and that was that capitulation that one of the few times I have been right in the years that we've been doing this call, and the last year that we've been doing this call, this was actually one of the ones that I called the day before it sort of started happening. And again, it was like looking at the steepening of this moving indicator that sort of gave me that conviction. So what I'm saying is that it's not enough that these things cross. Like that's not a good way to trade. But when they cross and sort of fail to recover and then start to steepen, like it's not a good sign. You have to go pretty far back to find another example where this has actually been invalidated. So for example, you have to go all the way back to the beginnings of Bitcoin to find one of these MACD crosses in the weekly to start looking for other counter examples. But that, just because we think that it's a long time ago doesn't necessarily invalidate that data. So let's give it some time to consider it. So for example, right in the beginning of the lifetime of Bitcoin, there was a death cross, and this is a fairly threatening death cross. But you can see the price went completely flat, and then it started to pick up again. So this was not really relevant. Here, though, you can see that it did, drop below. And at the time that it dropped, it didn't really have that far to go down anymore. This was, so at the time that it crossed to the bottom, was only something like a 20% drawdown, which is pretty, in traditional markets, 20% drawdown is pretty bad. In Bitcoin, that's not really anything to worry about. And I think that's it, right? So those are the only counter examples on this indicator. So in terms of market momentum, yeah, like it's looking like I think something catastrophic is like not too far away. And I think that the MACD, obviously it's not enough by itself to come to a conviction statement on its own. But we can also look around. I think there are things that tend to punctuate financial drawdowns, and one of those things is things like global conflict, and we know that things are not necessarily heating up in the Middle East, but they're certainly not the best that they've been. They're certainly a lot worse than they were during the last bull run. We know that the European Union election results have just come in, and Europe is going extremely right wing. Like, we're seeing a very strong swing to right wing and quasi fascist sentiment in Europe, and these things are generally conflated with international conflict. And so, yeah, I just think that both the sort of the political spectrum, the overall, over quality of the status of the world at the moment is something to consider. And having said that, it's also making a double top. Like we have hit this the resistance line now twice, and it does kind of feel like the market's going to pull back from me. On top of the fact that we now have completed a rally that has lasted as long as the one that we completed in the last bull cycle. So for me, like, there's a lot of a lot of things sort of lining up that's kind of preparing me to start to break some of that dry powder out, as Keith likes to call it, and start preparing for some of these moves down. Because I do think that it could be short-lived. Like when we had this quasi blow off top in at the end of this rally during the last bull market, we only had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks, right, to make a decision before it rallied higher. And I think that that's going to be pretty similar to what we see this time as well. Now, having said all of that, remember, like, I bring a very bearish bias with me. And, like I've already admitted in this call, I've really only been right once in the last year about what's going to happen in the Bitcoin charts. And so I guess the counter opinion, or if I was to try and, to soften some of these points, I do think that traditionally Bitcoin does hold these faster moving averages during a bull run, and so at the most modest, I think that maybe a drawdown of maybe 6.5% just to test these moving averages before moving higher. If that was your perspective, I would say that it's a completely valid one. But I do think that some of these slower moving averages are the ones that we've got to come back and test. And I do think that we're overdue for some people to start panicking. And so, yeah, okay, what to do about it? I think it's a good time to introduce the product, which is that you can set. Oh, sorry, I just heard someone's mic turn on. Is that my cue to stop talking?
No, it's okay. We're a little bit over the hour, but if you like, I'd like for you to be able to continue for a few minutes. Keith, are you able to stick around as well?
Yeah.
Okay, cool. I had a couple questions for you also. Go ahead, Mark.
Sure. So I guess what I'm trying to say is that I think a 6% drawdown from where we are is to be expected. And then there are various levels of pessimism towards the downside. But I really like this level between about 44.5 and 41K. And so how that would look is to basically create, you begin your range order by defining these levels. And rather than having to set these limit orders separately. Yes.
Really fast, you said introduce the product, but you didn't say what product. So for everybody who can't see the little toolbar, like the site up there or the link, whatever it is, you're on app.carbondefi.xyz is what you're at. This is a product of Banter, just for anybody who might be new to the call, who isn't aware. So Mark is now on the simulator where it uses the historic data, and you're able to combine any two standard ERC20 tokens, right? You're choosing your ranges is what you're showing us. and you're creating this trading strategy based off of what you were just showing us on the charts, right?
Correct. Yeah,
Cool.
and I'm ignoring the sell target for now. But in terms of looking to benefit from a very steep market capitulation like the one I have just speculated we may be heading into, coming to a price target that you would be happy to buy into, right? That some distance down from where we currently are, what is the sufficient discount that would make it attractive to you to buy? And for me, and having listened to Keith, who's like galvanized my conviction that this like 45K region is on the more likely is one of the more likely targets to hit. This is probably where I would set my range, right? And so rather than choosing a specific price point to buy all of my Bitcoin, what I would prefer to do is to set a high level and a low level and buy all the way between them, meaning that if the price keeps going down, I get to keep buying Bitcoin at lower and lower prices. And I would probably put about 50% of my trade position into this. Let's say $100 just to choose a number, and then after that, because I think that I am preparing for like a 50 or 65% drawdown, like Bitcoin is known to do in exactly these kinds of situations, and in fact did in exactly this level during the last bull cycle. I would actually like to keep buying all the way down to 30K. And so I after setting up this specific buy order, I would set
Now
up
you're
another
getting
one.
greedy.
Yeah, exactly. Well, getting optimistic, optimistic. And if it only has to happen once, it only has to happen that day, and we can rebound from there quickly. Be reminded that this is exactly what the coronavirus capitulation looked like. You didn't really have very long to benefit from Bitcoin at these prices before the market took off without you.
Can you
And so I
really
think,
compare something that you're looking at or hoping for, optimistic about, to the COVID crash, though? I mean, how often does something like that really play out? That's what you would consider a black swan, right?
Well, maybe.
So can you look at it and say this happened then? I wouldn't be surprised if it happened again without some sort of an event like that. Or, I mean, I don't
you
know.
say that,
You guys tell me.
but that's not even the most dramatic drawdown that Bitcoin's had. And in most of these other more dramatic drawdowns, there was nothing happening.
Okay, fair.
Right?
I think there are plenty of potential black swans circling the pond at any given moment.
Exactly.
But I also think that the COVID situation was a bit of an anomaly on how it potentially played out, because there was the uncertainty that came with that was not really specific to the market conditions. It was there was so much FUD and just nobody knew what was going to happen with our world, with our lives. There was real panic. And then it very quickly, that was one of that was a teaching moment too, I think, because that was something that if you weren't sure what it meant to buy the blood, that was a picture perfect example of when things dump like that. Those are often the best opportunities in the market.
I think it takes a strong mind to do it as well. Like it takes a lot of discipline to actually, put your money down when the market is doing that. Like it's a scary thing to do with your time.
For sure.
Keith, I had one more question for you. Mark, I didn't mean to cut you off, by the way. It was
No, not at all. It was totally fine.
I asked you a
And
question, you ditched us.
I didn't mean to leave the studio. I was trying to stop presenting, but the leave studio button is right next to it.
It's no worries at all. Keith, when you were presenting, we were looking at your heat map and you were saying here are a few traps.
I was saying what?
That there were a few traps. You could see a few traps.
Right.
What is it that you're seeing that makes you think that they're traps, or what gives you that impression, so that when others are looking at this, they can maybe identify this? Or is this from, maybe looking at this for so long? How did you come to that conclusion that that's a trap?
Okay, so
Can I bring you?
often,
Bring you back up real fast.
sure.
Okay.
I don't have a fantastic example of it on this screen at the moment, with the exception of um, this little block right here, and I'll brighten it up a little bit. Where you see first suppression and then liquidity appear. Boop! Look, just happened. Just appeared just before our eyes, right before our eyes, right? So this, and I'm watching a couple of different things here. Interesting dynamic here on the yellow order class here, which is the smallest order class. But you see this line that is quite steep and quite
Yeah.
smooth. It doesn't have a lot of contour to it, right? This is what I would call an artifact or a fingerprint of what TWAPing looks like. For those who don't know what that is, it's time weighted average price. It just means that somebody is buying incrementally. Boom, 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 boom. These are small orders, $100 to $1,000 each, and they're doing it in rapid succession while price is at this level. Now, why couldn't mega whales make big orders during that time? Because there's no liquidity above there, right? They're just going to slip right through. So the volume here. Let's see what that volume was, by the way. The volume here over that period of time. Let's see. I'm looking at the $100 to $1,000 order class, right? And we can see when they were bottomed around here, it was about. So it's not a ton of not a ton of volume there at that point. I thought it was a little bit more, to be honest with you, but it's not a ton of volume. But they're buying incrementally so that they can start accumulating in that range without necessarily showing their hand. And if it's if it's hundreds of thousands of dollars or millions of dollars in a short period of time, and there's no contour to it, chances are it's not retail, right? Retail lives in this class, but big whales, whales can disguise themselves in any other order class. So back to what looks like traps here. Okay, so you see this block of, what was it? It was about 6.8 million in ask liquidity that appeared right here.
Right.
And it disappeared.
Mm-hmm.
And it disappeared, making people think the price is going to go up. Right? And then it just reappeared.
Okay.
So that's those are what I call traps. And so I still have concern that we don't have a lot of bid liquidity here. The fact that it's strengthening a little bit is good to see. We need to see that. And maybe this level will ultimately hold at least through tomorrow's announcements from the Fed. But if this breaks down, and I wish Corio was still on the call, because I'd really like to know, he had confidence that price was not likely to go lower than 60K. And we've got a lot of technical reasons why we should stay above this lower low. Definitely a lot of technical reasons why we should stay there, but we don't have a lot of liquidity that gives me confidence in those levels at this moment. So liquidity, the order book is a living, breathing, organic beast. We could see that large block of liquidity come in, boom, right here at any moment, or even if it came down here, and that could change the dynamic instantly. You see right now, right? Let's just look at this range right here, 65K developing a little bit. And now has a little bit more liquidity, more akin to what we have here at 70K, right? You just want to see, you want to see the strength. If you're a bull, you want to see the strength on the bid side. And this game is played every single day, right? We ping pong from which side has the strength and which side has the most liquidity. You can see a lot was taken out here. And so now that this is thinner, are we going to be able to climb back up? I mean, think of how many people are going to get punished. First of all, the late longs that just got liquidated on the way past 68 down to 66, and now if it goes back to 69 or 70, those people are going to be crying in their beers tomorrow. And that's why I say this is a good time to practice patience, because it takes time for these moves to develop, and we like the Fed says, we've got to collect more data to make a decision. We need a little bit more data, and the data that everybody is waiting for comes in the next 24 to 48 hours. So why are you going to make a panic move before you have the information? If you make that panic move now, you're making it purely on speculation.
Awesome. Thank you so much, Keith. I put the material indicators site down at the bottom. Somebody was asking if you would mind running through a token of theirs. I don't know if we're at all comfortable doing that. Maybe we can in the future. I did look, however, on TradingView, and maybe, Keith, before we end, what I'd like for you to do for anybody who's just tuning in for the first time, we're obviously looking at material indicators. I said you are the co-founder, or, a co-founder of Material Indicators. We're looking at the fire charts and the trading signals, right? But how can somebody take advantage of what it is that you're offering here? What do they need to do in order to be able to look up their own, tokens and assets and things that they're interested in?
Okay, great question, and I appreciate that. So we have a series of products, a suite of products, if you will. Fire charts and all the data that's in fire charts. We have lots over here on the global analysis side as well, and futures funding. All of this data lives in fire charts, and all of this is relative to all BTC and USDT pairs on Binance. So we can look up any coin pair on Binance that trades BTC or USDT. In terms of the indicators, like the MTF mean reversion indicator that I showed, and trend precognition, these are on TradingView, and they work on any asset you can load on TradingView. So to access these, all you have to do is go to materialindicators.com and subscribe. And I know I have a promo code for you guys. That
you do.
If you want to share
code?
For all of the Carbon community and Banter community and our blockchain Banter fans, we do have a promo code available for you guys. And if I jump out of this screen share, I can go look it up if you don't have it handy.
That would be awesome. I don't have it handy because I didn't know if it was like for the one call that we, initially offered it on.
I'm not a one-hit wonder. I offer these things. It's I keep this active for our community here, and so
That's
let me
awesome.
go grab that really quick and see if I can find it. I think we have it probably has something cool like Bancorp letters in it or something.
I think it's carbon. It's carb something or car something. While you do that, I have a question for Mark. Mark, when we were looking at that sort of laddering, like the yellow, the retail class that Keith was talking about, he was saying that this is something that, it's like they had broken this up into a bunch of bids, right? This is what you were kind of showing us earlier with Carbon DeFi. So although Keith is looking at the order book through Binance, right? And he's more centralized exchange. Carbon DeFi is obviously a DeFi protocol meant for on-chain traders where they can achieve that same sort of action, automatically. Like they can automate that same sort of what's the word I'm looking for here? They can mimic this. They can achieve this on chain through Carbon DeFi.
It's the same.
What we were just looking at, right?
Yeah, Carbon DeFi. The mathematics that Carbon DeFi is based on describe an order book, right? Like this is the like what it was developed to do. And happy to report, for the longest time, this kind of stuff on a blockchain was extremely unattractive due to the slowness of block speeds and the expense of the gas and that so on. But happy to report that our recent deployment on the Say blockchain, which was founded by one of the Robinhood founders, is now operating at a speed comparable to, even faster than Binance and Coinbase, and is actually cheaper to operate, like cheaper to interact with there than it is to interact with Coinbase or Binance. So that, you know, we're no longer in that, you know, in that area of you know, the blockchain development upswing, where you're kind of waiting for things to start to become competitive with, you know, the incumbent infrastructure. We're now at the point where it's outperforming the incumbent infrastructure, and that's a really exciting time to be doing stuff.
Awesome. Thanks, Mark. I did post it up here so everybody who's watching, tuning in, is able to see that. Keith, you got a shout out from Santos really quickly.
Thanks, Santos.
So he just rolled in. He's gonna check. He's gonna catch the recording from the beginning. Hi, Santos. Thank you for tuning in.
All right, I found it.
Awesome. Let's bring it up here.
Ta-da!
Ta-da!
So very simple. Go to materialindicators.com. Pick the product you want. If you want Fire Charts 2.0 and the whole dashboard, and quite frankly, every single thing that we make, past, present, and future. You want a Premium Plus subscription, you get 20% off using MyCarb20 at checkout. Load your cart, go to the checkout page, and add your coupon code, and you will save 20%, and you will be arming yourself with a lot more alpha to give yourself the edge that you're looking for in this market. Because this market, I'll tell you what, you know, and I really wish that Corio was still on the call, because you know, trying to pick that target, what you think is the bottom, or how you think price is going to react at any time. When you're looking strictly at candle charts, for me anyways, I have a hard time understanding, you know, yeah, we have our technical levels, what's going to make it bounce. But when I can look at liquidity in the order book and go, oh, hey, we have support here and we have buying, or we don't have support and we don't have buying, that gives me some clarity and confidence that I just didn't have without this tool. I never, ever want to trade it again. If the company blows up and it goes away, I want this product. I don't ever want to trade without it. I mean, it literally has changed the game for me. And yes, I study it more than most people, but I've learned a lot by doing that. And so that's how I'm able to make the calls that I make, because I'm very in tune with Bitcoin's personality here. And I would say that every coin, every asset trades a bit differently, right? Yes, we know we're all kind of relatively in this market that trades somewhat together, but each coin has its own personality. Not all coins, especially the low market cap shit coins, can't necessarily sustain multi-million-dollar orders. And so maybe purple doesn't dominate those classes, whereas red and green might, or maybe just retail is pumping it. So if you're trading an asset that you have conviction on, I encourage you to study it, and don't just go blindly on what you see. Take some time to study it, and study it over time frames to see how things have changed over time and what order classes are really driving that coin. And you'll be amazed how much you can pick up on. At the moment, I like that we're seeing a little bit of bid liquidity coming in here above 65K. As we've said before, this consolidation range is still, you know, we were super wide. We started to narrow up, and it was looking good. And of course, things are opening back up here. We lost 67, so 65 is still solid for me to be in this range. But these are the areas of concern. This is where all the drama is going to happen. Okay.
Well, next week we're going to have to take another look when Corio is back and see if we go below that 60 that he wasn't feeling like we would. You know, we'll pick up where we left off with him for sure.
Listen, I hope he's right. Quite honestly, mm-hmm. I hope that he's right, and if he's not right, I hope we at least pump one more time before we go back down, so I can close those scalps that are coming from MTF, and and then repurpose that money on the next move down. Because again, until I see that bid liquidity coming in strong and bright, I think we're going to range for longer.
Well, thank you, Keith. Thank you, Mark. Corey, I know you had to leave a little bit, at the hour, but thank you to everybody who tuned in live and to the recording every Tuesday, 4 p.m. UTC. Thanks, guys.
Bye. Thanks, Jen.
Wonderful. Appreciate
Awesome
it.
call. Thank you.
See you guys.